Clearly there's been some rationalisation in the industry with Scottish Pacific and Bibby, the two biggest players in the traditional cash flow funding, coming together into a single entity. In the next gen or alternative finance space, which is where we operate, the Invoice Market operates, there's been a lot of activity in that space, with the Invoice Market obviously being the clear market leader in that we've written $130 million worth of invoice funding transactions in the last 18 months. But there are some other players that are looking to come into this space. And if you look internationally, then peer-to-peer or next-gen financing is obviously booming overseas. Having said that, there's a lot of players that set up a platform and say they're in the market but don't actually write a lot of business. So it's one thing to participate in the market, it's another thing to actually to be writing business and assisting Australian businesses to get cash flow funding. And I think that's where Tim, the Invoice Market, has been a real market leader and dominant in that space. There's a key difference between being able to just set up and say you've got a website and you're a peer-to-peer funder, and actually then getting out and on one side finding your funders, your capital, your source of capital, and on the other side the origination of clients that require cash flow funding. That's a lot easier said than done. There needs to be a lot of education through the advisor networks, particularly to educate their clients, the advisors' clients and businesses out there in Australia about alternative invoice funding. The clients are used to, or businesses are used to being, if they can't get it at the bank, they think they can't get it. Well, that's the beauty of alternative finance, is that there is now another source of invoice funding, but they've got to know about it. They've got to know how to find you. They've got to know how it works, and they've got to trust you as well. Although we're putting money out to them, ultimately it is a trust relationship, and they've got to understand our processes and feel comfortable with it to be offering up their invoices for funding. And I believe our process is being streamlined to make it as efficient and as easy and as quick as possible for businesses that require cash flow funding to get money into their bank account in a timely manner. Quite simply, Huntley, because in many cases they may not be able to get traditional forms of cash flow funding from a bank or other providers, and that's where the next gen or alternative finance space really comes into its own. We cater for a section of the market that is currently uncatered for by traditional forms of funding. Be that it might be a startup operation, they may not be running profitably, they may have an ATO tax debt, previous defaults. All those things will traditionally knock them out of traditional sources of funding, whereas under our model, we will assess all that and we'll still make a decision. We can't guarantee we'll fund them, but we will still look at that, and that doesn't necessarily knock them out. Our model prices for risk, so we will look at the client that we're looking to fund and who is their debtor, and the strength of that relationship and the strength of the invoice itself to determine A, whether we'll fund them, and B, at what price we will fund them. And that the traditional cookie cutter approach to invoice funding or deciding whether to fund a client, yes or no, we don't use that. We look at the client individually and assess a whole range of variables as to determine whether we'll fund them, and B, at what price. We are now catering to that market that simply couldn't get invoice funding before. Any businesses out there that are acquiring invoice funding have been to the bank said, no, sorry, unless you put up property security, which is what banks traditionally require, then they can certainly come and have a chat to us, and we will endeavour to assist them.